Brandon, good
Alex,
afternoon, sir. How are you?
doing well, man. How are you?
Good, man. Just talking to you gets me all energized. You have all that energy in the world.
Hey, it's you know what? This is one of these things where we can't be in person with each other. We can't feed off each other's energy like physically. Got to
Yeah.
do it virtually, man. Got to do it
Hey,
virtually. It's good to see you.
whatever it takes nowadays, right?
Whatever it takes. Got to do it.
Hey, first thing foremost, thank you so much for hopping on. And most importantly, how's family? How's kids?
Family and kids are good, man. I mean, we're going a little bit stir crazy. My wife's doing the distance learning with the two kids right now. They're both in elementary school, so
Wow.
scheduling that and planning that and getting that coordinated seems to work a little bit better when they do their work individually, one at a time.
Okay.
But health wise, man, everyone's healthy, everyone's safe,
Good.
everyone's trying to stay sane with the stay in place, shelter in place orders.
That's
Uh,
awesome.
but all in all, man, things are good. We're blessed. How about you guys, man? I know you got a little one at home too.
I do. It's her birthday is tomorrow, and I already got warnings from my wife. She says, "You come home and help me with the decor, or I am gonna go crazy." And I said, "I will be home. I will help you with the decor." So yeah, man. No, things are great. Baby's healthy. Wife's healthy. Life's good. Just a
Good.
little bit of business is kind of iffy right now.
Yeah.
But real estate is still moving. Believe it or not. There's just not enough inventory. But
Right.
just to balance that out, what I'm seeing is there's not very many buyers either. So 30 homes are hitting the market and 27 of them are going into escrow. So it's still moving versus
Yeah.
back in the days, it was 60 homes would hit the market and 57 would go into escrow, right?
Right.
So
Right.
same amount of sale if you look at it percentage wise, but the quantity of sales are lower.
Yeah.
If that makes sense.
Yeah, it does. And I know you're down in Bakersfield, down in Kern County. I'm up in Fresno County. Very similar markets. I know obviously Fresno is quite a bit bigger. I think double the size of Kern
Yeah.
County or of Bakersfield. But we're seeing the same things, man. I mean, compared to this time last year, the numbers are off about 20 to 25% in regards to new homes hitting the market, in regards to homes going into contract. So it's not, I mean, relatively speaking, it's not a huge dip. We're not seeing 50, 60% differences, but we're still feeling the impacts, right?
Yeah, yeah. I think we all are. I think just globally, in every business sector is feeling an impact. I think restaurant industry's just been slammed, and I
Yeah.
like my prayer goes out to those guys. Like I don't know how they're doing it.
I don't
Like
know either. We love going out to eat. That's our entertainment, right? Is going out to
yeah,
restaurants and feeling the ambiance and being around people. And
yeah,
so we're still trying to like support our local restaurants, right? And go out and get takeout orders. The ones that we go into or the ones that we go pick up food from, they seem like they're still busy, right? I mean, obviously their staff is cut way back, but they're prepping meals, man. They got meals lined up. They got bags on the table ready for people to come pick up. They're still doing business, but obviously they've been hammered, man.
yeah,
Absolutely hammered.
yeah. I think they're just if they are, I personally think they're just floating and they're
Yeah,
they're getting enough by to just cover the overhead. You know,
absolutely.
so
Yep.
yeah. Hey, why don't you tell us a little bit about yourself? I know you just mentioned you're out of Fresno market. What is it that you do? How you're involved in real estate, and how long you've been selling real or doing loans?
Yeah, absolutely, man. So I've been in the mortgage industry for almost 17 years.
Wow.
Grew up in Southern California, got in with a broker back then, and started bouncing around to some of the different retail outlets. Worked at Countrywide for a couple of years. Got my broker's license, opened up my own shop, and then moved up to Fresno. And 2009, went to work for Wells Fargo. Was in that retail space on the mortgage side for about 10 years. Ended up how I met you. Ended up moving down to Bakersfield to run the
Yeah.
Wells Fargo home mortgage branch down there and rebuild that office.
Yeah.
And then moved back up to Fresno July of last year, 2019. It's almost been a full year. Went back to work for a broker. So I work for a company called Nexa Mortgage. It's a broker based out of Chandler, Arizona. The awesome thing I love about being a mortgage broker is the access to lenders that we have, right? So working
Okay.
at Wells, we had to sell the Wells product, right? We had to sell everything that Wells offered. As a broker, we have access to pretty much all the lenders nationwide. I think our platform right now has about 60 approvals with different lenders. So what that allows me to do is really customize loan terms and find unique products to put clients in that are going to give them the best interest rate, the best lowest closing costs, the best terms on a mortgage, even if their loan scenario is a bit outside the box.
Got it.
Um, so yeah, being back in the broker world and really having that control and kind of having that presence of, I hate to say one-stop shop because I think it's a little bit played out as a term,
Yeah.
but we truly are. If I work with a client, they have a unique scenario, or maybe they have a cookie cutter scenario. It doesn't matter. We can find the best loan program for them.
So what I started out my career at Wells Fargo also, and love the company. Great company overall.
Yeah, good people.
So what I'm hearing is you're basically able to adapt and customize their loan options to best fit their needs to the mortgage.
Absolutely. Yeah. And it's one of those things, and I'm not going to put anybody on blast, and I love Wells Fargo. I worked for them for a long time, 10 years.
Yeah.
Some of the retail channels, some of the lenders are making changes to their guidelines, right? They're increasing FICO score requirements, or they're increasing reserve requirements for clients to have, post-closing liquidity, or they're removing programs altogether. So Wells Fargo just came out, I think it was maybe yesterday or 2 days ago, indicating that no more cash out refinances, right? Like they cut that program completely. Chase Bank came out about a week and a half ago. Jamie Dimon made a statement, purchase transactions 20% down with a 700 credit score minimum. So the overlays that some of the larger institutions are implementing, maybe they have some foresight into the market and where things are kind of headed, but it's putting a stranglehold on some of the clientele that's out there. Not a lot of people, especially first-time home buyers, have that 20% down payment or stellar credit to get into their first house, right? They might be looking for an FHA loan or a conventional loan with 3% down, or maybe a down payment assistance program. So that we have access to a slew of options, right?
Yeah.
That really can be customized to fit any need.
Yeah, and not everybody has 20%, which is, I mean, that's a big number to have,
Yeah.
So, as the Newsom still hasn't lifted the ban on when California should be reopened, and I feel like it's gonna go into May, and it's starting to come back up. Some people paid their mortgage for April, thinking, hey, it's gonna open up by end of April, and we haven't heard of anything, right?
Right.
So now there's May. Should people continue to pay their mortgage? Should they apply for forbearance? Tell me a little bit about that. What are your thoughts on that?
Yeah, absolutely, man. It's a good question. It's continue making your payment. Yes, make your mortgage payment first and foremost. I don't care if anybody tells you different. Do not stop making your mortgage payment unless, and there's a big unless, you do go through a forbearance program, right, with your current lender. So I'm a huge advocate for reach out to your lender. If you're struggling, if you're having issues, if you've been impacted by coronavirus, COVID-19, and you're struggling financially and you can't make your mortgage payment, talk to your lender, find out what forbearance options they have. Make note that a forbearance does not equal forgiveness, right? You're still going to be liable and on the hook to make those mortgage payments. They're just going to be deferred. You're essentially, in layman's terms, you're kicking the can down the road, right? But you have this grace period, and every lender is different. All of their terms are different. So make sure you read the fine print, make sure you get it in writing, and find out what those options are, so that you can kind of get back on track financially once this thing is all over.
Yeah. So, I mean, have you known of anybody that has went through a forbearance program, and what's their experience been like?
Yeah. I've seen a bunch of stuff online, right? And it's primarily negative information.
Right.
But I've had quite a few clients call me and ask what options are available, and I direct them to their lender, right? I'm not a direct lender, so I don't have those specific answers based on their current company that they make their payments to.
You mean their servicing company?
Their servicing company, yeah. Whoever they're making their payments to, that's the one that they need to get in contact with.
Okay.
So I don't have any personal experience with a client that circled back with me and said, yes, these are the terms that we agreed to, and they've gone through the process. But yeah, the information, the articles that I've read online, there hasn't been a lot of positive information come out regarding the forbearance program. And I'll if you don't mind, I'll run through a quick scenario. So let's just say your mortgage payment is $2,000 a month, right?
Okay.
And you enter into a 90-day forbearance. Some of the situations that I've read about online are you skip May, you skip June, you skip July, 2000. When August rolls around, they're not just going to collect the 2,000 for August. They're going to collect 8,000, right? 2,000 for May, June, July, plus the 2,000 for August. So that's one option, right? The other option, which is much more advantageous, is if the lender allows you, or the servicer allows you, to defer those mortgage payments and applies them to the very end of your loan term. So you still end up making exactly.
Okay.
Sorry about that. Have somebody calling in. I thought I put that on do not disturb. Yeah, so that the advantageous part is if the lender will allow you to make those payments at the very end of your, 30-year fixed or 20-year fixed or 10-year fixed loan terms, so that you don't have to, in one fell swoop, come up with $8,000 when your income has been, reduced to pretty much zero over the past 3 months.
So I mean, I'm actually mind blown, and I completely don't agree with forbearance, because if I didn't have $2,000 3 months ago, I'm not gonna have $6,000 3 months later.
Yeah.
Yeah. So they need to figure that out. See, there has to be a better solution. I just hope somebody comes up with a better one. So.
Yeah, and it's it brings up another point that that not a lot of people are talking about. And really, if you're not in the mortgage industry, you're not in the real estate industry, you might not even hear about. Right? And I don't want to go down a rabbit hole on this by any means, but the liquidity in the secondary market. Right? So if people just stop making their mortgage payment because they enter these forbearance terms, the servicer that they make their payment to still is on the hook to the investor that receives that final ultimate payment. Right? So it's really causing this kind of this uphill battle for the servicing companies, for the lenders that are servicing loans, that they're still having to make this $2,000 a month mortgage payment to the investor that owns the paper on the secondary market, even though the client, the borrower, the homeowner, is not making their mortgage payment. So where's this money coming from, right? And that's, I think, ultimately, that's the bigger underlying issue, is how is this going to impact our housing market 6 months from now, 12 months from now? Are we going to see a slew of foreclosures? Are people's credit score is going to be so impacted that there's no relief for them once this is over?
What do you think? How do you think it will impact our housing market in 6 months from now?
Personally, I think once the economy opens back up and people start getting comfortable going out and about and socializing and doing what they want to do, I think there's some pent up demand in the market right now. I do see a lot of homes, I think a lot of homes are going to hit the market. There's going to be a lot of sellers that just, I don't want to say flood the market, because I don't think it's going to be a flood, but I think it's going to be a very fast drip, right, of homes hitting the market. There's obviously a lot of buyers. I mean, you see it, right? You see it on a daily. A nice home hits the market that's decently priced, gone. Multiple offers, same day it hits the market, right? And it's gone. So if that's the case, and a slew of people list their homes once the economy opens back up, yes, there's going to be buyer demand, but I don't know if it's going to be enough buyer demand to keep prices stable. We may see a decrease in home values. That's my personal opinion. It's going to be interesting, man. Well,
nobody knows what's going to happen. And I'm hearing all kind of scenarios, it's insane. And one of these days I'm going to be like, let's just hope for the best, right? I hope it works out in everybody's best interest, and everybody prospers and everybody grows and everybody's just healthy at the end of it, right? So that's
amen to that, man.
Yeah, yes. That's my thing. And earlier you said that Chase and these other big banks are not doing cash out refinances, right?
Yeah.
So let's touch a little bit on refinance. What are your thoughts of getting refinances done right now?
Yeah, so the refinance market is still hot and heavy, man.
Why is it hot and heavy for people that don't know?
Interest rates are still at all-time lows. So without quoting APR, but I'll just throw out some rates. 30-year fixed rate mortgages for a pretty clean situation, a pretty clean borrower who has some equity, who has good credit, they're still locking in at 3.25, 3.375. 15-year rates are kind of hovering right around that same, a little bit less, maybe 3%. But yeah, mortgage interest rates still at all-time lows. So, if you purchased your home a year and a half, 2 years, 3 years ago, when rates were in, low 4s to mid 4s, it's a good idea just to look into it, right?
Yeah.
See what's available.
So when does it make sense? So let's say I have a mortgage payment of $1,500, right?
Yeah.
Just out of the thin air, and my interest rate is 4.25.
Sure.
Where does it make sense for me to call you and be like, hey, Brandon, I should refi?
Yeah, that's a really good question, man. There's my answer might be a little bit different than a lot of other people, and I don't know if it's just based on my experience or some of the clientele that I work with.
Yeah.
If you have a mortgage, call somebody, right? Call a lender, call your old lender, call a referral from a real estate agent. Talk about your options today. There's no magic number. I know I hear a lot of loan officers say, oh, don't refinance unless you can lower your interest rate by 1%. right?
I've heard of
That's
that.
not necessary. That's not a rule of thumb. That's not necessarily true, but they've been fed that information by somebody else that doesn't know. Because if there are no closing costs on a refinance transaction, let's say you don't finance any cost and there's no out-of-pocket cost, you could lower your interest rate by 1/8%, right? 0.125, and lower your payment by 25, $30 a month. And if it doesn't cost you anything, then why not take advantage of that?
Yeah.
The other thing to think about is the term of the loan, right? If you've been in a 30-year fixed rate mortgage, you've been in it for 5 years. A lot of people think if you refinance, you have to go back out to a 30-year loan. And that's also a fallacy. You can set the term of the loan for a specific year, right? So for 25 years, 26 years, 27 years, if you've been in the loan for 3 years and 4 months, you can set the term of the loan at 26 years and 8 months, right? So you
Wow.
can customize the terms of your refinance loan so that you don't feel like you're missing out or starting over back at 30 years, or that the interest you've paid has gone to waste, even though it's a tax deduction. There are so many options that I think the general market, the general consumer is just not aware of, that
Yeah.
if they call their lender, if they call somebody that's knowledgeable about it, can really give them
Right.
that
So
corrective.
it basically just boils down to an individual's needs and their current mortgage statement, basically, right?
Correct.
Okay.
Correct.
Yeah, because I get the number one question all day, every day, right? Is it a good time to buy or is it a good time to sell? And my response to them is, what does your finances look like?
Yeah.
Right? It's all about you. Is it important for you to sell right now? Is it
Right.
important for you to make that purchase right now? I
Yeah.
mean, is it a must? Can it be held off? There's a lot of questions, and like you said, I personally don't think there is an answer where one size fits all, right? It's custom to every person needs, right? Because they're all
I think you nailed it. Yeah, I absolutely think you nailed it. I think you really laid that out perfectly, because you're right. What's the motivation behind buying and selling, right? What's the buyer seller's motivation? What
Yep.
kind of situation are they in financially?
Mhm.
What needs do they have? And I think it takes a professional like you and somebody that's been in the industry like me for a while that uh, that can help the clients navigate all of that, right? And really think
Absolutely.
through the process and think through where they're at budget wise, where they're at in their lifespan, right? Are they having kids? Are their kids leaving the house, right? Like, what are those specifics about their situation
Yeah.
that really make the difference?
Yeah. So, and I wrote down another handful of questions. What for a new buyer, right? That's going out to purchase.
Yeah.
Um, what do you think is a better idea for them, right? I mean, I always, of course, have my opinion, get a mortgage first. But what do you think? Get a mortgage first, go house hunting first, 15-year, 30-year, enroll their taxes as part of their mortgage payment. That came up like yesterday.
Yeah.
Or what do you think? What are your thoughts?
Yeah. Another very good question, man. You're super, super insightful with these questions today. I think the numbers don't lie, right? And technology is at everybody's fingertips. And I think the
Yes.
last percentage that I saw of home buyers who start the process by looking online for either houses or mortgage interest rates, right? And it's like 80% of people nowadays, they start their shopping online, which that's just the way it is.
Yeah.
But first and foremost, you definitely want to connect with a real estate agent. I think that's a great idea. Whether that's the first thing you do or the second thing you do, the real estate agent is going to have if the real estate agent is like you, right, and has been in the industry for a while and knows what they're doing, the realtor should have access to a preferred lender that they trust, that they've worked with multiple times in the past, that they know is going to take care of their client's best needs, right, and truly work for their client. As a real estate agent, do you go out and show homes to somebody that's not pre-approved? You could, but probably not, right? You don't want to spin your wheels and waste your time and take up a bunch of your time, bunch of their time if they haven't been pre-approved with a lender. So if I'm going first steps, I would say talk to a lender, start the process, get pre-approved, have them review your credit, income, assets, so that you know what kind of purchase price you're looking at, you're qualified for, that you can actually buy. And then, circle back with your real estate agent at that point with the realtor and start looking at houses that you qualify for.
Yeah, and it's very basic, right? I mean, I don't want to take you out for a $400,000 house. You fall in love with it.
Yeah.
You qualify for 350, and now you're gonna hate me for the rest of your life.
Yeah.
right? Or vice
Yeah.
versa. You qualify for a $500,000 house, and I'm only showing you $300,000 houses, and you don't like anything I've shown you, and now you don't like me anymore because
Right. Right.
you're just, you get what I'm saying, right? So
Yeah, I do. Absolutely.
it's one of those things. What about 15-year or 30-year mortgage? What are your thoughts on that?
Yeah. Again, so, in the past, the spread between a 15-year fixed rate and a 30-year fixed rate was pretty expansive, right? Usually about a half to 5/8 of a point. Um,
Yeah.
Today, the dynamic is a little bit tighter. So 30-year fixed purchase, if you're looking at 3.25, 15-year fixed loan, you may be at 3%. So there's not as big of a spread.
Okay.
So again, it comes down to their financial situation, what they can afford, what's in their budget for a mortgage. If they can afford the 15-year fixed and they're not going to be, house rich and cash poor every month, obviously they're going to save a ton of money over the lifespan of the loan and own that house after that 15th year. But with that spread in rates being so tight, I know it's nice from a budget standpoint to have the extra money and go for the 30-year fixed rate option to give you that lower minimum monthly payment, so that you can always pay more per month, right? Like
Right.
most of the loans, I would say 95% of the loans nowadays
Yeah.
on the market, there's no prepayment penalty. So you pay it off as quickly as you want to pay it off.
Yeah, and that's what I give. I'm like, look, go in with a 30-year mortgage, make that extra $500 payment, right?
Yeah.
But
Yeah.
if something like this happens, like COVID, which I doubt will ever happen again, but you never say never, right?
Yeah.
And if that happens, you have that safety net of $1,500 mortgage payment that you can afford.
Right.
So I absolutely agree with that. And one of the things I was thinking last night was um, lending restrictions. Do you think there will be more restrictions, more regulations? I mean, either on the consumer side or as a loan officer or as an industry overall?
Yeah. Yeah. That's a little tougher one to answer, man. I think the direction we're going, at least for the short term, I think we are going to see some increased restrictions,
Okay.
some tightening, right, on guidelines for specific lenders. Um, what I've seen, and there's one lender in particular that I work with that changed their credit score requirements 3 times in 1 week,
Wow.
from 620 to 680 to
I heard that.
640.
Yeah.
Right. So it started super low based on, Fannie Mae and Freddie Mac. 620 is the minimum score. Well, this lender had put in an overlay, bumped it up to 680 and then dropped it to 640. So I think we're seeing more and more of that kind of as we go along and as we progress with the virus that has caused this pandemic. I think there's still money to be lent, right? That's kind of the bottom line. And with the access to the amount of lenders that we have on the broker side, a lot of them have not changed their policy at all, right? They follow HUD guidelines, they follow Fannie and Freddie guidelines, and if the client qualifies, they qualify and they get the loan and they package it up and they sell it off.
Right. Keep it nice and simple. Okay.
Absolutely.
Yeah. So what the other thing I wanted to touch bases was Credit Karma and credit score, right?
Yeah. Yeah.
So and credit is going to be a really important factor, I think, going down the road, in 2020. So Credit Karma shows a score of 780. Loan officers pull a credit score and it's like 650.
Right.
Or 700. Let's say 700, 80-point difference.
Yeah.
Why is there such a big lag, in your opinion? I'm not gonna bash. I don't want to bash on Credit Karma because I think they're. I mean, I get emails from them, right? I apply for a credit card and I get an email. And I think they do a great job of that, right? Because if it wasn't me, I want to know who applied, right? So they do a great job of that. But I don't understand the differences in the score.
Sure. No, that's also a very good question. And definitely Credit Karma has a place in the market or has a place in the industry, right?
Yeah.
It's good for consumers to be able to monitor their credit, find out if there's people, pulling their credit inquiries, right, from creditors that maybe they didn't apply with, fraud alerts, things like that. And just to kind of monitor their scores as they go. So the biggest difference, and a lot of consumers don't know this, right, and they rely on that Credit Karma score to try and qualify for a home.
Right.
Credit Karma is primarily consumer credit driven, right? So think about your credit cards or sometimes auto loans, right? They take in different factors and they base their model off of different parameters than when you go to a mortgage loan officer and you pull what's called a tri-merge credit report, all three major credit bureaus. That tri-merge credit report, there's typically a 30-day lag from the time a payment is made on a credit card or an auto loan with the creditor till the time that it gets to the credit bureau itself, right? So Credit Karma is typically, it's kind of real time, right? Once that payment is made and once the creditor gets that update, the score changes. Where on the mortgage side, there's like a 30-day lag. But those different parameters that come into working with a mortgage loan officer, having your credit report pulled, is going to give you that output of a different score, a little bit lower, a little bit higher. You know, I've seen it sometimes come back quite a bit higher than Credit Karma.
I have too. Yeah, I absolutely have. And, you know, I've seen more of them come at a lower point. So that's why that's
yeah, me too.
Yeah. But hey, look, you know, let's switch some gears, right? We had enough lending and real estate talk, and you're a man of high energy, right? So what is it that you're doing to keep a positive mindset?
Yeah.
Right. Staying healthy and your wife not murdering you.
Yeah. Well, the last piece there is the most difficult one, I'll be honest.
Oh, don't do that.
Yeah, no, she's great, man. I love her to death. You know, honestly, man, I try to wake up early and read my Bible, to be really honest with you. I think the word of God that's written in the Bible is super useful to me, fills me up with that truth and really gives me the energy and the gusto to go throughout my day. You know, with all the gyms closed, it's, you know, my gym at home is not phenomenal by any means. So keeping that motivation and that drive has been a challenge. But I go on walks with the family every day. You know, we get out for at least 30 to 60 minutes and walk around and do, you know, some calisthenics, some normal stretching. Right. But it's tough, man, you know, because we're in the house for a lot of hours per day, or I'm in the office. I'm still going to the office a couple of times a week for a lot of hours, you know, per day. And having that energy built up, there has to be a release, right?
Yeah, absolutely.
How about you, man? Because I know you're an athletic guy.
Yeah, man. Look, before all this went down, I used to go run a mile every other day or a mile and a half, and I loved it because that was my release. I would listen to a podcast and I would just go, right? And it's just no phones, no nothing, nobody's bothering me that whole hour, and it was good. After this, I go on walks with my little daughter and the wife, and it's you know, there's very grateful, very it's been, you know, those little things in life you come to realize that you never appreciated before, right? Before this, I would have never gone on a little walk at 6 p.m. with my little baby girl. That just wasn't an option, you know? But I do that. You know, right behind my office, there's a little park. I run a couple of laps a couple times a week. There's a staircase. I go up and down that. But yeah, you know, it's just, and try not to drive my wife crazy. That's the other thing. But other than that, no, she's hanging in there.
Mine has kicked me out of the house a couple of times because we'll go neck to neck and I'll say something that she doesn't agree with, or I'll just start getting on her nerves, man. I'm kind of kooky from time to time. But I think, you know, as humans, we're super habitual, right? And we need those routines. So staying in the routine is the tough part, and starting the routine also kind of difficult. But I think writing down those goals, right, knowing that things are going to get back to normal at some point, if we're still doing the things we need to do today in order to keep those routines and stay clear-minded, stay positive, whatever that is for you, right? Then we're going to get back to it and pick up right where we left off.
100%, 100%. Hey, any last word of wisdom for everybody that's watching out there?
Word of wisdom, you know, breathe. I would say breathe, right, through these times. A lot of people are struggling. A lot of people are suffering. Reach your hand out to people. I know you can't shake their hand right now, but reach your hand out, you know, step outside your comfort zone. In terms of real estate, get in touch with Alex because he's absolutely phenomenal. I had the pleasure of working with him while I was down in Bakersfield for about 18 months, and he knows what he's doing. And regarding mortgage, you know, again, I'm not going to bash anybody, but reach out to a mortgage broker. There are so many options when you talk to a mortgage broker that you might have no clue about if you go to a direct lender or a retail bank, right? So yeah, stay positive, stay happy, give your wife or your significant other a kiss today. Love on your children as much as possible, and just keep positive, man. Spread the love.
Yes, sir. Well, hey, once again, thank you so much. I truly appreciate your time today, and you stay safe and healthy out there, my friend.
My pleasure. You too, brother. God bless you.
Thank you, sir.